الدرس الجاي.
إن شاء الله. جزاك الله خير. بسم الله والحمد لله والصلاة والسلام على رسول الله وعلى آله وأصحابه ومن والاه وبعد. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما يا رب العالمين. Oh Allah, teach us what will benefit us and to benefit us with what you have taught us, and increase us in knowledge, O Lord of the world. So the last two halaqat we had, we spoke about the seerah of the Prophet sallallahu alaihi wasallam. However, there was a request by several members of the community to go over the basics of investing, and specifically investing in the stock market, so that we can have a little bit more clarity about the foundations and the fundamentals of investing. Now, I want to give a disclaimer. The information that I give here today will be new to some of you. And for some of you, it will be extremely basic. And for others, you might learn something new. So keep that in mind when we get to the question and answer period. Those of you with really advanced questions, allow time for people who don't have that advance of questions, and I'd be happy to take our conversation on advanced topics offline. One of the things that I find common in our community is that there are a lot of assumptions about what certain things are. For example, someone messaged me yesterday and they said, "Is my 401k halal or haram?" Someone else will say, "I've been told that the stock market, all of it's haram. I've been told that the stock market, all of it's halal. I've been told that we should stay away from investing because we're taking advantage of others." All of these things are absolutes. The Shara doesn't deal with absolutes except in issues like Tawheed and Shirk. Except in issues where Allah subhanahu wa ta'ala has expressly forbidden something or expressly allowed something. Otherwise, we have to analyze the situation that we're in, what we're doing, and understand the operations and the way things are done before saying that something is halal or something is haram. Allah subhanahu wa ta'ala warns us to not use the words halal and haram lightly. And do not say, concoct lies with your tongues. وَلَا تَقُولُوا بِمَا تَصِفُ أَلْسِنَتُكُمُ الْكَذِبِ. Don't concoct lies with your tongue, saying, هَذَا حَلَالٌ وَهَذَا حَرَامٌ. This is halal and this is haram. To lie in Allah's name when you have knowledge. This is why many of the scholars of the Salaf, whenever they would opine on something, they would say, "I dislike it. I prefer other than that." Or they would say, "It's impermissible," or "It's permissible." But they would be very careful not to use these big terms. Why? Because that meant that you were expressly speaking in Allah's name. So tonight, what are we going to talk about? We're going to talk about the fundamental contract from which investing stock, particularly in the stock market, is built off of, and that is partnerships. We're going to talk about the conditions for partnerships to be valid. Then we're going to talk about what a joint stock company is. Then we're going to talk about the vehicles and how you invest in the joint stock company. Then we're going to talk about the things that carry our stocks, like funds and retirement plans, and so on and so forth. And then from there, inshallah ta'ala, you'll have, I'm hoping that you will have a good, broad basis by which to base your conversations on. So, let's start with partnerships. Partnerships, the Prophet sallallahu alaihi wasallam partnered with people in business. This is something that is so well known from his sunnah that we don't need to bring a specific evidence to say that he was involved in partnerships. He sallallahu alaihi wasallam partnered with his companions, with the unbelievers, and with others. before Islam and after Islam. So sallallahu alaihi wasallam engaged in different types of partnerships. Some of those partnerships were silent partnerships, where one person would contribute the money and the other person would contribute the work. Some of them were active partnerships, where both people contributed both money and work, skills and capital. Other people, or other types of partnerships, were where people would contribute their influence and others would contribute their work. Some of them were based on business and merchandise, some of them were based in agriculture. If you'd like the details of all of that, classically, I wrote an article for the Oxford Encyclopedia of Islam and Law called Business Organizations under Islamic Law. And you can find that for free on my academia.edu page, as well as on the Oxford, the OUP, the Oxford University Press site. So all of the details will be there. So given this basis, there are three main principles that any partnership has to fulfill. Number one, the losses or expenses have to be charged against the capital of the company. They say, الوضيعة على رأس المال والربح على إصلاحها. This is the Shari'i principle, the Islamic legal principle, that losses are borne by the capital and profit is distributed as agreed upon. So the very first principle, losses are on the capital. Second, profit is distributed as agreed upon by the partners. And then number three, this is very important. No partner can be made to assume a loss or given profit before the others. No partner can have a flat fee or payment in addition to the percentage of profit that he takes. And I'm going to explain each of these, inshallah ta'ala, in some detail with examples. So here's the first principle and the first example. And I'll tell you why this pertains to the stock market. Losses and expenses are borne by the company's capital. Let's say there are four brothers, Muhammad, Ahmed, Dawood, and Peter. Each of them contributes $25,000 each. Now, how much money do they have capital raised? How much? 100,000. While they're doing business on $100,000, they lose $20,000 from bad business, unpaid accounts receivable, right? Bad merchandise, whatever it may be, fees, whatever it may be. Now, how much capital do they have left over? 80. Now, if every one of them were to say, the end of the year, our business wasn't successful, let's divide what we have amongst ourselves and reclaim our capital, how much does each of them get? 20. Each of them gets 20, right? So each of them lost how much? $5. Each of them lost $5,000, right? So they share in both the losses as well as the gain. This is a second example. The second principle. Profits are distributed in percentages agreed to by the partners. Now, let's say that they created a company and they called it Four Bros Investment, right? Four Bros Partnership, and they took their $100,000 and they invested it in merchandise. And when they were after the business cycle was done, they had a gross revenue of $120,000. How much more do they have than what they put in? $20,000 on top of the original 100. So now, when they distribute profits, what does everyone get?
5 more.
Everyone gets $5,000 of profit and
their capital.
And their capital, which was 25. Right? Everyone gets that. So, therefore, they share in the way that they share according to what they agreed upon. Now, the profit shares don't always have to be equal. You can say that one investor will come in at a certain amount of capital and take 50%, and another person will come in and take 20%, and another person will come and take 10%. When do you do that?
At the agreement time.
At the agreement time, and it's an issue of negotiation. If I, for example, come in and I have no skills, and I'm not contributing anything, and I don't have much of a name, and people say, who is this Joe guy? He's like Peter here. Who's that guy, right? He's not adding anything. But somebody comes in, and they say, alhamdulillah, he's well known, he's got a big name, right? We're going to bring him in because it's going to bring in more customers. Then we can entice him, negotiate with him to give him more profit so that he joins. But the percentages have to be known and agreed upon by the parties. Third principle. No partner can take a flat fee or a payment along with his percentage of profit. So let's say in this example, our 4 bros partnership, Ahmed says, you know what? I'm only going to come into this partnership if you give me the very first $5,000 of profit before anyone else. And then we split everything equally. Is this permissible? Why not? Everyone know, I know all of you here, all of you understand that there's something wrong with it.
But if it's agreed upon.
What if it's a salary?
Let's not go too much into the what's if. I'll get into the what's if when we do the Q&A, right? But if he comes and says, not because he is taking a salary, right? For no other reason, just saying, I want $5,000 before anybody else gets anything. Otherwise, I'm not going to invest. What happens if they profit more than 5K? So if they were, in our previous example, they take $120,000. Ahmed gets 5, the first 5, right? Then what does everyone else get? What do they split? 15. They split the 15. So each one of them is going to get $3,750 each. So that means Ahmed gets $8,750, and then the other 3 take $3,750. Sound right? Sound right? Sound wrong? Sound good? Sound bad?
Not balanced.
I hear a lot of different opinions.
Sound bad.
We're going to auction it off. But see, it all sounds fine when everybody's making money. But let's look at it what happens when all they made was $5,000. Ahmed says, I want $5,000 in profit before anyone else gets anything. What happens when they only make $105,000 in gross? Take out the capital, what's left? 5,000. Who gets the first 5,000? Ahmed. Ahmed takes all of the profit. No one else gets anything. If there's not $5,000 of profit, what happens? It can remain a debt owed to him until that amount of profit is made. Essentially, Ahmed is saying, I want you, right? Or Ahmed is saying that this is going to be a debt owed to me, almost like a loan. So, is it fair to the other investors who put in the same amount of money? No. The same amount of effort? No. The same amount of capital? It's not fair. Now, if Ahmed was, for example, saying, okay, I'm going to work in managing this, and therefore I'm going to get an extra 5K as a salary, that salary would then be an expense. But it wouldn't come into the profit distribution. It would be expense against the capital as a loss. Right? Otherwise, it remains as a debt that eats away at the profit. So why is this impermissible? It's impermissible because, number one, it's unfair. Number two, it causes other people to profit. It causes one person to profit before others. It forces the other 3 to pay for Ahmed's loss. And it lets Ahmed profit at the expense of the other 3. Because if they were all sharing equally, only 5K came in, how much would each of them have got? 1,350, right? So, what did Ahmed do to justify that increase? Nothing. All things equal. I'm not talking about salary, skills, anything like that. All things equal, he did nothing to get that increase. So everyone is basically paying for the loss that he would have occurred, or taking a hit in order to make him whole. Okay? So these are the three principles of partnerships. Number one, that the losses are taken from the capital. Number two, that the profits are distributed according to their agreement. And then number three, you can't join a flat fee with or flat preferred fee with a percentage, right? Unless, of course, that fee is a salary, and then that salary is not going to come from profit. That salary is going to be considered an expense. It's going to be on a different part of the balance sheet. It's not going to come out in the profit. Okay, so now moving forward and talking a little bit about the stock market. So we were talking about simple partnerships between 2 to 3 to 4 to 5 people, all of them contributing capital at some time, all of them trying to do some type of business that was tangible to them. Business moves on. We move out of the agrarian age where people were mainly working in farming and merchandise, and we get into the modern economy, where we now have joint stock companies, right? Joint shareholder companies, where you now have a company that has thousands, if not millions, of shares, right? Each of those shares equally priced. So, in the simplest terms, when you buy a share of a partnership or a share of a company, you are buying a part of ownership in that company. It's a claim that you get on the underlying property of that business, meaning its assets and its earnings. But you also take the liabilities of that company as well. So you assume ownership of that company. Companies like this are listed on the stock exchange. A lot of different stock exchanges all around the world. So when you own a share, let's say that a company owns or issues 100 shares of its stock. When you buy that one share, you have owned 1/100th of that company. And if the company owned only $1, okay, then how much would your share be worth?
1 penny.
How much?
1 penny.
1 penny, 1 cent, right? And if it owned $100,
$1.
if it was $100,000,
1,000.
your share would be 1,000, right? So the value of your share changes with the value of the underlying assets that the company has, the underlying business activities, which means that the price will go up and it will go down. And that is something completely natural. While I don't mention it here in the slides, I want to mention it here because a lot of people, they treat investing like it's a guarantee. They think, well, I gave this company my money, I should get all of my money back. That's not how that works. You take the risk because you also take the reward. A man came to the Prophet ﷺ in his lifetime. He said, Ya Rasulullah, inna al-as'ara qad alat, fasa'il lana. O Messenger of Allah, prices have gone too high, so set prices for us. The Prophet ﷺ said, inna Allah hu al-sa'ir, al-qabd al-basit. وإني أرجو الله وإني لأرجو أن ألقى الله وليس لأحدكم علي مظلمة في دم ولا مال أو كما قال صلى الله عليه وسلم. The Prophet ﷺ said, Allah is the one who sets prices, the one who gives and the one who takes. And I hope to meet him without any of you being able to claim anything against me regarding blood or wealth. What this is talking about is that market volatility is normal. Too many people make two big mistakes going into invest. Number one, they treat the market like what? Casino. I'm just gonna keep putting money in, putting money in, putting money in, pulling the lever, waiting for a payout. What's going to happen? Most of the time, you're going to lose your money. Why? Because you weren't making an educated decision about your investments. Or you go in thinking that it's a guarantee that you're going to profit. And the Prophet ﷺ said, "Al-ghunmu bil-ghurm." Reward is contingent on risk. Risk is contingent. That's a prophetic principle. That when you bear the risk, you get the reward. And when you get the reward, you should have been liable or bearing some of the risk. So, when you own that 1/100th of a company, right, you are now called a shareholder. If there's profit, you share in the profit. So there's an increased share value, or a distribution of a dividend, or both. So there are some stocks, for example, some shares, you own the company, every quarter they're going to pay you a dividend, right? Apple pays a dividend every quarter on each share. I can't remember what the last dividend was, but that's an example of a company that pays a dividend. A company that never pays a dividend is Amazon. They take all of the money and they put it back into other things that they're doing in the company. Some of them fail, some of them make money, doesn't matter, right? But you either are going to get an increase in your share or you're going to get a dividend. Now, when you buy a stock in a company, you are an owner in that company. So as a Muslim who holds certain values, who wants to be a moral and ethical and upright person, there should be certain things that you look for in a company before you become a partner. Meaning that, back to our first Four Bros partnership example, if three of them said, hey, let's go and partner and create a competitor to the local liquor stores here in Houston, would that be something viable for us? No, it would not, right? Why? وَإِنَّ اللَّهَ إِذَا حَرَمَ أَحْدَ شَيْءٍ حَرَمَ ثَمَنَهُ. The Prophet ﷺ said, when Allah has forbidden consumption of something, He has forbidden its price as well. So we don't go and involve ourselves in the manufacture or the promotion of things that we ourselves don't partake in. So in order to purchase a stock, purchase a share, there are two things that you need to look out for. Number one is know that you are an owner of that company. You have moral responsibility now for the stocks that you own. Number two, to make sure that you're looking or realizing your values and what you do, you need to screen out companies that make their money doing haram things. So, Anheuser-Busch would not be a company that we would invest in. Screen out companies. Number two, you need to screen out companies whose financials have red flags that can lead to something which is impermissible. Now I say red flags because this is not a bright line rule. There's some leeway. We'll talk about that in a moment, right? Let's talk about the first type. So what type of earning activities do companies have? So nowadays, back in our previous example, our Four Bros partnership were doing what? They were buying merchandise. Let's say, for example, they entered in with clothing. They started buying clothing, right? Then one of them said later on, you know what? Not only do we want to buy clothing, but we can start to supply corner stores. And so they go into food. Now they're diversified. Now they have clothing and food. Then somebody says, oh, well, 30% of everyone that you're supplying is a gas station. So in addition to the food, why don't you supply cigarettes? Right? You see how you go down the slippery slope of diversifying what you're providing, but also getting into things that could be questionable and, if not, impermissible. Then you go into other things. So you want to look for the companies that have primary earning activities that are involved in things that are permissible. What's the easiest way to do that? By excluding everything that's not permissible. So you won't go and buy a company that is involved in the manufacture and the distribution of alcohol, tobacco, or drugs. and I will answer it preemptively, yes, even medical marijuana. Right? And I use that in serious quotes. Because most people, it's like, I need medical marijuana. What's your problem? I'm so depressed. Why are you depressed? I haven't been able to get medical marijuana. There are legitimate cases in which someone, people who have real issues that does necessitate medical marijuana. But guess what? They're already getting that in most places. They're already getting that from their physician. And they're already getting the strands that they need for their specific issues, right? But nowadays it's become just a proliferation of the haram. So we wouldn't buy companies like Anheuser-Busch, we wouldn't buy companies like Marlboro, all of these companies. Why? Because we don't consume that, it's forbidden for us, so therefore we don't profit from it as well. We wouldn't go into gambling or betting operations. Number 3, cinema, adult entertainment, advertising and media, all of these things that provide people impermissible and haram things to look at. And because it's a family night, we're going to go into too much detail there, but you all understand what I'm saying. Number 4, conventional financial services, those that are involved in the lending at interest of money. We don't involve ourselves in that as well. Number 5, defense and weapons manufacturing. And this is always a tricky one, right? We have many Muslims that work in this field, right? And if you might not work in it primarily, you might work in it in some associated way, right? Is it wrong to have national defense? No, it's not wrong to have. Is it wrong to have weapons?
No.
So why then would we list this?
Because they use it where they use it.
Because the Prophet ﷺ forbade us from selling weapons to people that are in a civil war. People that are at a state of fighting each other, he forbade us from selling weapons to them. He forbade us from selling grapes to a person we know is going to make wine and sell it. Right? So it's not that the thing itself, grapes are not haram, guns are not haram, but it's what's being done with it. So if you have a question, this question always comes up, well, maybe I work for a robotics company, and they provide, services to something, and down the line, that's involved in something that is creating drones and killing innocent people around the world, you may want to reconsider what you're doing if you're working in that line primarily. If you're support services or a dual purpose or a multi-purpose piece of technology or something, that may be different. But you wouldn't want to invest in the people that are profiting off of killing your brothers and sisters and killing innocent people around the world. So that has to be you have to be very careful with that. Because this is what they call preventing the means to something which is harmful or impermissible. And then lastly would be food and beverage sectors that are involved in prohibited items, like pork and alcoholic beverages and things like that. So that might not seem, it's a bit different than the very first one. The very first one is about the manufacturer. Number 6 is about the distribution. Okay, so for most of us, I think all of us, this is something which is very clear. We wouldn't go and buy those stocks. Now, the standards that I have up here are the standards that were created by the organization known as the Association for Accounting and Islamic Finance Organizations, IOFI. I always mess up the acronym. It's a long acronym, but it's known as IOFI. And they essentially are a group of scholars and specialists from over 30 countries around the world who come together yearly and they set standards for Islamic finance and Islamic accounting organizations. And so these are the standards that they cite. Now, in other places around the world, other standards are used. For example, the standards that are used in the Malaysian stock market are slightly different than this. the standards that are used in some banks in Saudi Arabia and in Egypt are slightly different than this. But the international standard and most of your Islamic investment companies here in the United States will use this. Okay? So we'll use this as a basis, and then we can read up on it more. There's some pretty good papers that have been written about the topic. So number one is, you want to make sure that your debt to average market cap, your market capitalization, is less than 30%. What does this do? This measures how much debt the company holds. Why do you want to avoid a company with lots of debt?
They're going to lose money. Interest. Lots of interest, and they're going to lose money.
The interest from the debt, but also
Bankruptcy. Again, you're going to lose money.
so when a company has a lot of debt, that means one of two things. It means that they have assumed a lot of debt because of financing, or they have a lot of debt because of poor business. And either way, it makes them extremely susceptible to volatility in the market. So the best hedge against a volatile market is a well-capitalized company. So when you allow the stock to have more than 30% of debt, not only are you allowing the company, where the company will probably be borrowing a lot at interest, but you're also allowing it to affect its own business, right? By not remaining stable and growing organically. Number two is you want to look at cash to average market cap being less than 30%. And this measures the financial stability of a company. Someone might say, well, don't I want my company to have a lot of cash on their books? Why would you not want your company to have a lot of cash on your books?
It's not making use of it.
Exactly. It means one of two things. Bad management, so they're not making use of the cash, but actually it can mean one of three things. Bad management, so they're not making use of the cash. Number two, bad management, so they're not giving a dividend or reinvesting, so they don't have new lines of business or profitable lines of business that they can reinvest in. Or number three, they're holding cash to inflate the price of the capital assets. Because in reality, the company's not worth that much money. So when you hold lots of cash, you inflate the price of the company. Now, in the U.S. stock market, this is something that there are accounting standards, the GAAP standards, and things like that that are used both here in the U.S. and internationally, help prevent this. However, it's a red flag. There are cases, however, when a lot of cash is okay. For example, I was once asked to research equity for one of my clients. And their money manager sent me, they said, we really love this company, but the problem is it has too much cash. I said, okay, why does it have all this? Instead of 30%, they had maybe 45, 47% cash. Well, recently they're a telecom company. And recently, to finance their expansion without taking loans, they pre-sold call minutes. Here in the States, we don't use them that much anymore. At least I haven't seen them in years. But you know, in other places, calling cards and minutes are pretty common, right? You buy a card, you get minutes, you scratch it off, you put in the number, you charge your phone with minutes. So they wanted to expand into a certain area of Asia where they were. And they didn't have any cell phone towers, stores, none of that. So what did they do? They sent in mobile salespeople and they pre-sold minutes. They took all this cash in and they used the cash to roll out their infrastructure. Very smart. So it's not always the fact that there's lots of debt or lots of cash, but these should be red flags that make you want to read more. And then cash to assets is less than 30%. This measures the liquidity of the company. This is another standard, very similar to this. There's also some issues as well that scholars bring up about cash to the assets. The hadith of Fudalah ibn Ubayd, that he went to and he bought a necklace which was made of gold and precious stones. And he bought it for, let's say, 17 dinar. I can't remember the amount of dinar that remember Sheikh, if you remember the hadith from mine. But he bought this for 17 dinar, right? Or I'm sorry, he bought it for 15, when he got home and he separated, he found that it was worth 70. Right? So he will gold for gold plus the stones, right? And so the Prophet ﷺ told him, separate, or you should get the estimate of the value of the gold and the stones before buying. Why? Because you don't want to get into a situation where you're buying more gold for less gold at the same price. You know, 2 gold coins for 1 gold coin is riba, right? $2 for $1 is riba, and that's at a time when precious metals were common as currency. So this, with fiat currency and with accounting, doesn't apply as much as now. But it is a red flag to let us know the actual value. So when we have a high amount of cash to assets, again, we said that can be the inflating the value of those assets. Number 4, and this is probably one of the more important things, is there's 2 things you should look at a stock when you're going to buy it, right? And that is its income statement and its balance sheet. On the income statement, so we have, for example, let's say, for example, give me a company, any company, not technical. United? What does United do? They fly, right? So United will, however, sell things on the plane, right? Right? So all types of things, right? Is that its primary activity for making money? Are they actually making money off of that, or is it just there? It's a secondary earning activity. So there's a difference between primary earning activities, secondary earning activities. Primary earning activities means this is the main thing they're making their money off of. Secondary earning activities, and the accounting standards have changed over time. It's been said that if it was 5% or less, it was a secondary earning activity. I believe the GAAP standards now are 10% or less, but most scholars still give a fatwa of 5% or less. And that is that if it's a secondary earning activity, then it's not what they do to make money. They're making money tangentially. So, let's say, for example, you are invested in United. And you look on the balance sheet, you see a line that says other income. And under other income, you see 0.001%. And they usually don't even list it. Then you go back to the SEC filings, you look at the 10K report, and then you see that it says 0.001% in-flight sales. That's the colognes and the drinks and the food and everything else that they're selling, right? So if that secondary earning is impermissible, then you should purify yourself up. You should absolve yourself from it, right? So you take that 0.001% of your earnings, give it away in charity. This is what they call taqiyya. Why? Because you don't want to consume anything that was made from an impermissible source. Now, what's the basis of this? A very primitive, simple example. A man came to the Prophet ﷺ. He had purchased semen, ghee. Everyone knows what ghee is, right? Clarified butter. What happens when we live in areas where there's no refrigeration? What happens to the clarified butter, the ghee, semen, in the daytime? It melts, right? It liquefies. What happens at night when it's cold? It solidifies. So the man comes home, he takes the ghee, he puts it in his pantry. He wakes up in the morning for Fajr. Contrary to popular myth, or popular belief, Medina is very cold, especially at Fajr time, especially in the winter. And there's a time of the year they call Mirba'ani, 40 days, extreme cold. Hits you in the bones cold, right? So it is very cold in the desert, especially at night, especially right before Fajr. So he wakes up at Fajr time, he was going to make something, takes opens up the semen, the ghee, and he finds a mouse fell in the top and died. A mouse.
Mouse. Far.
So now he has a whole vat of butter, and he's not sure, can I eat from it? Can I not eat from it? He goes to the Prophet ﷺ. Says, what do I do? Do I throw it all away? The Prophet ﷺ said, "Alquhu wa ma hawlahu wa kulu min." Throw the mouse and a little bit around it and eat from the rest. Meaning that when you think, is it permissible to eat dead rats? I would hope no one would say yes. It would be very popular. We have to have another lecture. We just cancel this one and do something.
What about live ones?
So it is when you are able to segment and segregate things which are impure or impermissible, number one, you must. And number two, you're still allowed to eat from the halal that's left. Right? When you can, and with financials, it's very easy to be able to track this. Right? Somebody says, well, I'm not sure, the percentage, not that sure, add a little bit, give it away. You're never going to do harm by giving away money in charity. Charity never diminished your wealth. Right? So by giving that away, you absolve yourself of having earned anything impermissible, and secondly, you are able to help others. The Prophet ﷺ said in the hadith of Abu Hurairah in Sahih al-Hibban, "Man iktasaba malan haraman, falahu wizruhu, fa'alayhi wizruhu, wa la ajra lahu fi, wa alayhi yatasaddaqa bihi." Aw kama qala sallallahu alayhi wa sallam. Man iktasaba malan haraman, فعليه يتصدق به ولا أجر له فيه وعليه وزره أو كما قال صلى الله عليه وسلم. Whoever earns something that's impermissible must give it away in charity, and he gets no reward for that charity, and he will be sinful if not. Right? So you have to give that away. This is a way to absolve yourself of involving yourself in something which is impermissible. So these are the general rules for screening your stocks. Now, you've purchased a stock, okay, it's met all of those conditions. Where are these stocks going to be traded? And I mention this specifically because I want to dispel a myth or an idea people have about how the stock market works. You are either going to buy that 1/100th or 1/1,000,000th of a stock, right, in the stock market individually. Now, it used to be, a long time ago, you walk up to the physical stock market, you take out dollars, you give them the money, they give you the stock certificate, the printed stock certificate. What happens now? You get on your phone, right? You open a Robinhood app, or TD Ameritrade, Schwab, or whatever you have, and then you buy the same thing. Okay? So you buy that stock individually. Now, the next level of this is, let's say, for example, I want to buy technology stocks, but I only want to buy the biggest technology stocks. So I want to buy, for example, Google. And what else? Apple. And IBM. Right? And what else? Amazon.
Uber.
Qualcomm. Bloomberg, right? I want to buy these big technology stocks, right? So now I can do one of two things. I can go and buy each of those shares individually, or I can find someone who's done it for me. They went and created a fund. That fund is simply a container, okay, that they put the stocks in. Right? So someone says, are mutual funds halal? Are mutual funds haram? I ask the question, are cups haram? Are cups halal? Cups are cups. Right? Whatever you put into your cup matters. Right? So, you have mutual funds, exchange traded funds, index funds. What's the difference between them? For most of us, it boils down to it doesn't boil down to much of a difference, quite frankly. But internally, it's the frequency at which they trade their holdings and some of the fees that are associated with it, right? and those who manage it. But for most of us, we're just simply buying a bundle or a collection of stocks. Now you can trade those funds or those individual shares through a brokerage account. Okay? So you trade your funds or your individual shares through a brokerage account. The accounts that you use will be two types. One will be a taxable account, and the second will be a tax-sheltered account. A taxable account is like your checking account in the bank. You will pay taxes on the money that comes into that account. Number two, your savings account in the bank. You will pay taxes on the money that comes into the savings account. Number three, your regular trading account that you open with a brokerage. A regular taxable brokerage account means that anything you hold in there, cash or stocks, will be taxed. Now there are different laws on how they're taxed. We'll leave that to the CPAs and the accountants amongst us to tell us about capital gains, short-term gains, long-term gains, all of that. But it will be taxed. Now the second level is a type of account that you put your investments into to protect you from taxes in some way. So let's talk about those. Now this is one of the questions that I mentioned at the beginning. People come to me all the time and they say, is my 401k haram? Is my 403b haram? Is my traditional IRA, my Roth IRA, my HSA haram? Again, it's about what you put into it. So let's understand what these accounts are. Traditional IRA, it all comes down to how you put the money in, what happens when the money's in it, how you take the money out. So a traditional IRA, you put the money in before paying taxes. It then grows, tax-free, and then when you take it out, you don't pay money on the capital, the original capital that you put in there, but you will pay it on the earnings. Your Roth IRA, you put in after you pay taxes on your paycheck. So traditional IRA, 401k, 403b, the money goes in before you pay taxes on your paycheck. The Roth IRA, the money goes in after you've paid taxes on your paycheck. Then your money is going to grow tax-free because you have already paid taxes on capital. You can pull it out after 5 years with no taxes. You only pay taxes on the growth at the applicable rate. So one of them has taxes on the growth, one of them does not. Or on the growth in the earnings, one of them does not. The 401k and your 403b, your money goes in. Say you'll put $100. Then your employer does what? Matches it. Puts another $100. Then that money grows, and then later on in life when you pull it out, you pay taxes at the applicable rate. Health savings account. Your money goes in before you pay taxes. It grows tax-free, and it's taken out tax-free. If you use it for healthcare expenses. If you don't, you pay a penalty, and you roll it over to something else. Okay? So, all of these accounts have nothing to do with haram and halal. They only have to do with the way that you're taxed. So, why is it important to understand how they work? Everyone know what a Russian doll is? Yeah. So I figured that either people would know what a Russian doll is, or they're familiar enough with technology that this would work one way or the other. Okay? So this is a Russian doll that tells us the difference between bits and bytes and kilobytes. Right? So if somebody, we have enough technology in the community, somebody's going to know one of these two things. Either you like art or tech. And if you don't like either, I'm not sure. Okay? Ask the person next. Right? So you have building blocks. One of them is included in the other. So a bit, right, is included in a byte. Right? And then when you get 1,000 bytes, get a kilobyte. When you get 1,000 kilobytes, megabyte. You get 1,000 megabytes, gigabyte. You get 1,000 terabytes, or 1,000 gigabytes, terabyte. 1,000 terabytes? I don't know. I'm not that versed. Okay? So you get the idea. You're starting off with a point of information, it accumulates, it goes inside, sits inside something else. Okay? So think of it like this, and I'm just doing this for approximation. You have a share, one share in a company. That share would be included in a fund, a mutual fund or an ETF. Your investment account would hold that fund or ETF. Your brokerage holds your account. Your brokerage trades in the stock market, and the stock market is part of the economy. So you see how kind of cascading? I'm only putting this here so that we can understand that in the end of the day, is the economy haram? Yes or no?
No.
Stock market haram? No, it's just a place where people trade. Brokerage, is being a broker haram? No, it's a fee-based service, right? It's having an investment account?
No.
No. Mutual fund ETF? We said it's just a cup, it just holds everything. What's the important thing?
Shares. Yep.
Understanding where we invest our money, how we actualize earnings, what we are investing our morals and our values into, right? And you might think, oh, what's the use in doing any of this, right? Don't people have so many more options? They're going to make so much more money. So the only companies, or the only funds that survived the crash in 2008 were the Islamic funds. Why?
No interest.
They weren't invested
In haram.
in things that were permissible, and especially companies that use lots of debt and lots of interest. They had a huge hedge. They made more money traditionally, right? So value investing in general makes more money, and people that do corporate social responsibility, environmental, social, and whatever the R in that is, ESR, ESG, governance, ESG, environmental, social, and governance issues make more money, and people that do Sharia compliant have all of that included, so they have better earnings. Right? So don't think that by abstaining from something that you're losing out. You will actually make more money in the long run. The problem with investing is that people want to put in $1 today, they want $100 tomorrow.
Yeah.
Right? Again, going back to the casino. But that's not how it works. You have to be in it for the long haul. You have to think about it in terms of 5, 10 years, not 5 months or 10 months. Right? So long-term investing is important. So we talked about those standards. I am actually an advisor to this company. So this is, it's called, if you look up Zoya, ZOYA.finance. It's a free app, but full disclosure, I'm an advisor to the company. Right? So it's a free app. Download it, search for the stocks that you want. It has a watch list. You can make bundles to recreate your ETF, your favorite ETFs that maybe you can, if you have fractional shares, you can just start to trade fractional shares. Purchase them through your brokerage account, your IRA, your self-directed 401k, whatever it is. And then whenever it goes in and out of compliance, they'll send you an alert and tell you what the status of the company is and give you alternatives if the company that you want to buy is not Sharia compliant. So for example, if you, let's say somebody says, you know what, I went to Walgreens today and I think I want to buy Walgreens stock. And you look it up and it says, Walgreens is not in compliance. So then you look at the body and scroll down and it says, oh, but instead you can buy CVS, you can buy Rite Aid, so it gives you the alternative. We'll take questions in a moment.
Is it like Robinhood?
I'm sorry?
Is it like Robinhood?
Is it like?
Robinhood?
No, it's not a trading app. It's simply for research, right? So look, it's a free app. You just look it up, but we have the most extensive database of information for I think our data stream is probably better than what you get through Yahoo Finance and Morningstar and things like that, right? So yeah, this is one way to get the work done for you. You don't have to call me. You don't have to get an Excel sheet, do the calculations yourself. Right? Just look it up on the app. Now, I will point something out. Some stocks will be marked Sharia compliant. Some stocks will be marked non-compliant. Some stocks will be marked questionable. Do you know why? Let's say, for example, there's a marketing company. Okay? So someone says, you know what? I don't mind marketing. I don't mind the use of pictures in marketing material. I'm okay with that, right? I've researched it. I feel comfortable with that, right? Then they're going to buy it because the business activity, marketing is permissible business activity, and the financials are good, right? Why would it come up questionable? Because some people might say, well, I don't want to make money off of that segment. Other people say, I don't have a problem with it. We're refining that process right now. That anytime you find something that says questionable, just press the button for the report and pull up the report and read. All of the revenue streams will be listed. And then you can judge for yourself whether you agree with that or not. Right? So for example, some people would buy Snapchat. Snapchat's a very popular technology company right now, right? But I personally would not buy Snapchat, right? Other people, it's a social media app like anything else. We want to empower, democratize, and empower the investor to make a choice on their own with the information of what is actually going to affect their investments and the roles of their investments. So, with that, that's pretty much all I have for you, and we've gone on for about an hour now. And if it was Ramadan, we'd stay till Fajr. But it's not. So this is how you can keep in touch with me. JoeBradford.net is where I do my articles and courses. I started a new business this year called Money Coach, where I do financial planning and coaching, one-on-one, mainly with young professional couples that want to do financial planning. Number 3, mywillsia.com, Islamic wills and estate planning. So if you need a legally valid will, valid in all 50 states, that takes into consideration all the rules of inheritance in Islam, we have set that up. I'm a co-founder, along with my partner, Muhammad Al-Qaina, who is a corporate and estate planning attorney. We had a group of scholars review our work as well. And then lastly, we have Zoya Finance, which was started by Saad Malik and Bilal Qurashi, and they brought me on as an advisor to work with them on the Sharia compliance standards. So those are the 4 kind of things that I'm doing right now, and the ways that we can keep in touch with me, inshallah. And I'll be happy as well to provide these slides to the Masjid, and then you can send it out to the email list if you like. Yeah, that would be great.
Istiqlal, thank you. Now it's a lot more clear. However, this is a complex matter, and I'm pretty sure some of us have some questions. So we have about 15 minutes to entertain the questions. So can you please raise your hand if you have questions today? And see, 1, 2, 3. Okay, we'll start with 3 questions first, and then we'll move to the sister, inshallah. We'll ask 3 questions together. Maybe Sheikh can answer it in 1 or 2.
Sure.
Assalamu alaikum. My question is a bit off subject, but kind of related. I know it's a separate topic in itself, but can you share a bit light on the housing finance?
That's way too expansive to talk about right now. Yeah, it's way, I'm sorry. Yeah. We can do that maybe another time.
There's a reason to invite Sheikh.
I wonder if the dividends paid are more than the earnings per share for a given quarter or over a year.
If the dividends paid are more than
The earnings per share.
why are you seeing that as an issue? I want to understand.
Is it coming from that, or where is it coming from?
Is the company guaranteeing a dividend payment?
Yeah.
They are? Well, is it a preferred share? Yeah, we have to figure that out then. Because if it's a non-preferred share, meaning that it's a common share like everyone else, markets, right? And they're paying a dividend to everyone. That means that they're distributing whatever excess that they have, their earnings or cash that they have on hand, because they don't want to keep it in, whether that's for tax purposes, earnings distribution, whatever. But if it's a preferred share, then it goes back to the example that I gave you about the four bros partnership, where one of them is getting. So that's why the majority of scholars, if not most of, or all of them nowadays, say that preferred share should not be purchased because you're taking a dividend payment at the expense of the company.
Yeah, it's not like preferred share.
Okay, want to be more sure now? Now it's not the preferred share.
Yeah, I mean, once you explained it, now I know it's not like preferred share.
I would say that I can't give a general statement about that. I would say that you would have to look at the company financials. They might be just distributing cash that they have on hand, and they might be taking it from debt. They might be doing it for some tax purposes. You'd have to look at that case. If you do have a company like that, send it to me, and then we'll let me look into it. Yeah. Thanks.
Came late, so I was just wondering if options I don't know if you mentioned already.
So I didn't talk at all tonight about options trading. Options trading in general, you should not involve yourselves in what's called binary options. It's very popular. It's not allowed in the United States. It's done through Europe and most of the UK. It's akin to basically a contract for difference or gambling. However, if you're doing, vanilla options where you are, writing a call or a put on the purchase or the sale of a stock, then there is a variance of opinion amongst scholars as to whether it is permissible or not. Some of them say that trading in options is not permissible because they don't see there to be a value for the underlying option, meaning that you are essentially putting a price on the person's ability to buy a stock or sell a stock at a future date, and that thing doesn't have financial value, right? This is the way that they conceptualize it. Another group of scholars say, no, we see the ability to access the market in and of itself as something of financial value. Like purchasing a ticket to a sporting event has a financial value, right? It expires after that event is over, right? But it has a financial value that goes up and down, right? Why? Because it allows you access to something that you generally don't. There's a good paper on this subject by Muhammad Hashim Kamani, professor in the University of Malaysia, and he has a very extensive book about the subject called Islamic Commercial Law, and his opinion is that it is permissible. I lean towards that opinion. So generally, I would say that as long as you are not writing what they call naked options, where you don't have, or you don't have the stocks, you don't own the underlying, then writing the option is fine for the stocks that you own. Buying and purchasing from the market would be fine as well, because there is a shown economic value towards the or for the use of options in the marketplace. A lot of stuff. What about crypto? So I wrote a very long article on cryptocurrencies on my website, so check that out. And I also did like a 20-minute talk on Bitcoin and cryptocurrencies for a blockchain conference in South Africa. So that's on my YouTube channel. So cryptocurrencies are permissible as long as you follow the rules of currency trading in Islam. Meaning that the rules of currency trading in Islam is that there's spot transactions and you don't trade the same currency for its own time. So if you're doing, Bitcoin for dollars or Bitcoin for Litecoin, right? The currencies have to be two different pairs, and it has to be a spot transaction. Otherwise, it's fine. I'm not saying it's smart, guys. I'm not saying it's the best, right? Because in arbitrage, where people make money off of the difference from in the market, you really have to be on top of it. Let me phrase it like this. A lot of people, they want to go into options trading, crypto, they'll do online arbitrage with merchandise, they'll do whatever that is. They'll day trade, on the stock market, right? Why? Why do they do all that? Huh?
They're trying to make profit.
To make money. To make money. But most people, when they do it, what happens?
They lose it.
They lose it. Why? Because if it's not your full-time job, you're going to lose money.
Right.
You will make more money in your entire life doing what you do well as an employee or a business person than trying to hit it big part-time with trading. Now, I'm not saying anybody shouldn't trade. What I'm saying is that if you're going to trade stocks, you have to be willing to read a lot and research a lot and understand the market. And that becomes even more detailed and intricate when you get into things like crypto and when you get into things like options. So if you've got the time, I mean, I know a lot of people that do make money off of it, right? I met a guy at an Uber driver recently. I was like, so, you just do Uber? He's like, I do Uber and I trade. I was like, really? How well are you doing? He's like, yeah, I'm doing really well. I said, what are you using as a thing? He goes, anytime Trump talks about a company, I trade that company. I hit 2 positions, right? Call on a put, and I trade that company, right? So, those things are permissible, but I would just be very wary. When we say that something's permissible, it doesn't mean it's always good for you, right? Take the precautions, educate yourself, understand the markets that you get into before you get into them, right? Like one of my, mentors, a long time ago, he says, people are like, is it halal? I'm like, yeah, it's halal. He's like, okay, fine, but the watermelon's halal. But if you eat a lot of watermelon, what happens? You get a stomach ache, right? Then whose fault is it? Is it because the watermelon was haram? No, it's because you ate too much. I'm just saying, take your precautions and I'll make it easy for you. You're welcome.
Okay, some question from the system.
Yes.
Assalamualaikum warahmatullahi wabarakatuh. I have a question, but it's regarding jacket in 2 different times. For example, we took money, okay, for example, like times, and then we use the money. Do we have to pay zakat of those money that we took some of it? And the second one is still about zakat. If we took lump sum, we have to pay zakat for those money, or for example, if we took lump sum, there's going to be, once. But if we took monthly, we have to pay zakat of our money.
Where did you take the lump sum from?
From retirement or whatever, Retirement, yes.
So retirement, what kind of retirement account? Because that's
I
going to
think my husband will know, but this is my question to him. I guess he's probably know. But I'm saying if you retire, do you have to pay for zakat, for lump sum?
Okay, so generally your zakat is only due on the freely accessible wealth that you have for a year or more, meaning the savings at the end of the year. Okay? If you choose to pay monthly, you can do that, but you will essentially be prepaying every month and then calculating in Ramadan how much you did owe for the year and then topping it off with any difference. Now, with taking zakat or paying zakat on your retirement funds, some people, when they retire, they cash out of all of their retirement and they take it as a complete lump sum, right? Other people, they don't. The account stays open. They continue to earn on it. Now, what does it become? It's become the business that they earn from, right? So they will pay on, which is essentially like the NV cap value, right? The cash, the receivables, the inventory. I have a calculation on how to do that on my website. Essentially, it will add up to be like, instead of paying on 100% of the share value, we end up paying about 25 to 30% of the share value, right? Because that represents the capital assets and the receivables and things like that. So you will pay because it's like you're operating a business, but you'll pay less.
What do you think? What do you suggest in the term of Islamic finance? Whether it is good to take lump sum or just take monthly cash flow?
That's a personal finance issue, and it depends person to person. So some people might take monthly because it makes more sense for them. Some people might take lump sum. I would just say that make sure that whatever you're taking from your retirement is also not going to cause you too much of a tax burden. And so if you are at the age where you are retired and you're taking money, make sure that, like for example, if you have a 401k and you can take lump sum, you can roll it over into an IRA, and then the IRA can actually pay certain types of expenses for you, as well as give charity in your name, and then the money left over becomes your income, but it's less than what you would have gotten, so you pay less taxes on it. There are a lot of strategies that you can use to be able to pay less taxes on it, but your zakat will basically, depend upon what you have at the end of the year left over, and then you're going to pay on that. Now, I know you have very specific questions, but we're talking about it in a very general way. So maybe one-on-one I can talk to you and your husband and we can see about that.
Inshallah. Jazakallah khair.
Right.
Bismillah. What are the rules on interest in Islam? If it's haram, how big or small?
Okay, so the question was, what is the ruling on interest in Islam? And if it is haram and how big or small? What do you mean by how big or small?
Like, yeah.
Yeah. So the general rule on interest on give cash now for more cash later, which is the basic equation of interest-bearing loan, right? Is that it is impermissible, and it is considered riba. Now, whether that percentage is large or small doesn't matter. Now, I want to make a caveat, or I want to qualify that with something. Not everything that is called interest in modern accounting is considered riba under Islamic law. Meaning that interest, as an accounting term, is any amount above your capital. Right? So if you lease a car, what do they write down? Down your down payment, capital is the amount of the value of the car, and then they'll put money factor, profit rate, interest rate. Some of them say interest rate as well. But you're leasing the car from them. They're simply telling you the percentage of profit they're going to get from it, just like you would get from Avis or Budget or anywhere else. So just because the word interest is used in a contract doesn't make it riba under Islam. The function of it, however, is what's important. So if it's money now for more money later, like a working capital loan at unsecured working capital loan, then that's definitely going to be no doubt about it, riba, right? If it's interest that's paid from a bond, right? Then that's money for money, no doubt that that's interest, and that's also riba. But at times, with certain contracts, the word interest can be used, meaning that there's an amount that's earned above and beyond the capital that was given, but it's not necessarily considered to be riba. I hope that answers the question.
Saudi Arabia sold bonds. I was just wondering, how do they do that?
Oh, they just do it. Yeah, I mean, we don't have any responsibility towards them nor them to us. They've been involved in treasuries for, since probably the creation of the country, so. They don't.
The second question
Yes.
is not in topic, but I like to ask.
Sure.
Are there any Islamic rules again accepting like catering order for the day?
Can you put the microphone closer to your mouth? I didn't hear the last part.
Are there any Islamic rules against me accepting a catering order for the day?
Or LGBT. So for example, you have a catering order,
for the birthday.
Have a what?
Catering,
Catering for
catering
the
order.
birthday occasion, birthday party, so they have to cut for birthday party because he doesn't believe in birthday.
Oh, my
Is this
goodness.
something that actually happened to you,
Yeah.
or are you asking hypothetical?
Yeah, it's happened with
It's
her.
happened.
So,
Birthday party.
I would say that anyone that asks you to do something which is outside of your morals and your values, right? Then you shouldn't, you should abstain from serving them. But if it's a general order, right, for something that you would provide anyone that comes into your store or uses your service, then there's no problem in doing so. So there's a difference between, putting a decoration that has symbolism or meaning that you disagree with, and simply making food for anyone who would pick it up. So yeah.
Okay, how do you feel about it? Their own opinions.
Share a question for me in stock in the trading. So sometimes when you want to go into stock for a long term, then you do all the fundamentals, right? You look at the company, well-being, and etc. But sometimes if you want to go just for a short term, of course, as a Muslim, you look at the activity of the company, what they do. But sometimes you don't look at the financial well-being of the company. You just look at the pattern. And then, when the pattern tells you to get in, you get in, and the pattern tells you to get out, you get out. I mean, if you just base on this, is it okay? Is it permissible?
You mean as a trading strategy?
Yes.
As a trading strategy, sure. I mean, you can.
But you don't. I mean,
you're going to. Let me back up for a minute. When you buy a stock, you're going to do one of two things. You're either going to be a long-term investor or a short-term investor. Long-term investor is going to be anything 366 days or more. Short-term investor is going to be anything shorter than that. That could be you hold it for a day, you hold it for a month, you hold it for almost a year, right? Now, if you are a long-term investor, what's your intention? Your intention is the value of the company to become profitable, to be income generating for you over the long term. When you're a short-term investor, what's your intention? Arbitrage. You're just making profit off of the difference of prices. In that sense, when you're trading stocks within the year, right, in the short term, the stock in and of itself, it's the inventory of your business. It's the merchandise that you're buying and selling. There's no problem for me to go down to Harwin and buy a bunch of cell phone cases at $2, right? And then go to a fair out in Sugarland and sell them for $5 and make $3 off. Is anything wrong with that? No, right? Why? Because my intention is buying something permissible and making a profit off of its purchase and sale, right? So when you do that with stocks, same thing applies.
So there is no gambling aspect in it.
No gambling aspect whatsoever. Now, I will say this: a lot of people think they're smart and they try to do technical trades, and they lose their shirt because technical trades are that, they're technical. You have to be willing to read all of that information and really understand the markets before you take big positions and you try to do big time swing trades. Again, depending upon the market where you're at least in the United States, if you want to do day trading, trade with do consecutive trades within 4 days, you have to have at least $25,000 in a margin account that can be used as a buffer against your losses, because the losses can be that big. Otherwise, you're a swing trader and you're trading week to week. But there's no problem if you're going to do fundamentals trading, looking at the business activities, or technicals trading. But you yourself have to understand why you're doing it. If you're just arbitraging the difference, just like I wouldn't go and buy, I went down to again Harwin and I bought a bunch of pork shoulder and I sold it. I'm not going to do that, right? So you want to make sure that the underlying product is permissible, but there's no problem with arbitraging in the short term. Again, the watermelon example. It's permissible, but is it smart? Just understand what you're doing doing it, if you're doing it. Some people do, you know, some people, they read every single financial report, they understand the markets, they have a keen eye for, you know, entry and exits, and they make money at the end of the job. But some people, they lose a lot of money. So it's important to just be aware of that.
Don't invest something you can't lose.
Yeah, exactly. Don't invest something that you can't lose.
Rule number one, that's right.
Sheikh, you mentioned that the share of the company at less than 5% haram, you can make it as charity.
Yes.
But what if, like, most of gas station businesses right now owned by Muslims? So the fatwas that go, they tell them to put it in charity inside. Is that permissible also?
So I think that's a different issue. So the gas station as an individual business, they have an income stream that's coming from haram, and it's going to be more than 5%. Definitely. So that doesn't apply to what we're saying here. We're saying here is that for the overall business activity, you're going to have many different segments of business that are going to be 5% or less. Those don't affect the general permissibility of the company. Even for, let's say, for example, a gas station, right? Somebody can open a gas station, right? It's permissible. But when the things that they're providing and they're selling become, you know, the primary reason why they're earning their money or staying in business, then they should stay away from that. A lot of this.
Okay, so it's haram to.
It's haram to sell liquor. That's definitely definitely haram.
This one is basically saying it's out there.
Any more question?
Okay, last question.
Last question. Yes.
Islam, Sheikh.
Just Islamic mortgage, guidance of everyone.
Islamic mortgage?
You're gonna talk about it next time, right? You said you're gonna talk about
Next
it.
time.
We're going to talk about mortgage.
Next time.
Yeah, so we'll do one more question, if it's about the stock market.
How about short selling?
Short selling. So, the majority of scholars, as far as like the academies and things like that, they don't allow short selling. And the reason why is they say that you are selling something that you don't own. Now, I personally have a different take on that. And that is that when you, as long as you're not doing a naked short, meaning that you're not selling something that you don't have access to or are liable for, then my position is that it's permissible. And the reason why, and I give this example, if I came to your home and I borrowed a 5-pound bag of sugar from you, what do I owe you now?
5-pound bag, sure.
And if I go home and I bake cookies, what do I owe you? Do I have to give you the cookies or I give you a 5-pound bag of sugar?
Sure.
5-pound bag of sugar. And if I take the 5-pound bag of sugar and my brother comes to my home and he says, hey man, I need sugar too. I'll buy it from you for $10. And I say, sold. Alright? Now, what do I still owe you?
5-pound bag, sure.
5-pound bag of sugar. So I go to the Kroger down the street and I find sugar is being sold for what?
$1.
$1.
About $1, right? So I just made
$9.
$9, right? Off of something that I was liable for.
Okay.
I held it, right? I was liable for that sugar during that time. Now, what's the difference here? What's the important thing here is the sugar is fungible. Everyone know what fungible means? Means it's replaceable, right?
Yeah.
Right? So $1 is fungible for another $1. I can give you $1, right, and trade you another $1. Same value, same utility, same thing. So, if you borrow from your broker, right, to then sell and then buy back and make the difference, I personally see no problem with that. But I will tell you that I differ with the far majority of scholars who are much older and wiser and knowledgeable than me. But that is the conclusion of my research. To be honest about my research, I have to be honest.
Yeah.
And that's the conclusion that I've come to my research, that if you're not doing what they call a naked short, Never Google that at work, by the way. Made that mistake before. Then it is okay to do short selling. Now the problem with short selling in the United States is that to be able to short sell in the United States, you have to open up a margin account, which interest will be charged on. Right? In Europe and Asia and other places, that's not the case, depending upon the bank. But here in the United States, it is the case. So just be wary of that, what they might charge for you. Right? And also, if you do take that, just understand that that's my personal opinion, my result of my research, and not representing any body or any group of scholars.
Can I one more question?
I don't know. Do we have? Will we allow it?
Short question?
Yeah, very short.
Short question. Only
But the
three
answer
parts.
is gonna be long.
He came from.
Okay, I have a 2 questions.
Oh my God!
Just one. Just one.
Okay, okay, just one. Like entertainment, when you bought the stock, right?
Yeah.
A long time ago, like or probably 15 years ago, right? So, for example, you buy Netflix, like Netflix entertainment.
Yeah.
But there is it's very some entertainment over there.
And you're very rich if you did that.
And then you make profit
Sure.
after 15 years. So, because you don't know before,
Yeah.
is it halal or haram?
So.
And then when you want to sell it, for
Sure.
example, right now,
Yeah.
right? Can you use that money, or you need to, what are you gonna do with that?
Okay. So.
Hang on, the second question.
Okay.
Just only one. Just only two. So when you play with the margin, I know the margin is haram because your interest after 2 days.
Sure.
Right? For the first day, you get the 0 interest, and you can play, and then you can buy in the same time and sell the same time, but it's still 0% interest for the 1 day. For the second day, you get interest.
Margin of what? Currencies or stocks?
The margin for the stock. When you used to use the margin, we just want to do the only 1 day because there's 0%. So there's the 2 questions for you.
Okay, so I'm going to answer the first one. The first one goes back to the principle of whoever engages in something impermissible, not knowing the ruling. Okay? And Allah subhanahu wa ta'ala addressed this directly in the Quran about those who engage in riba, right? Who were previously loaning, earning, and taking contracts at interest, right? And then later on repented and understood that it was wrong. So he says, فَإِن تُبْتُمْ فَلَكُمْ رُؤُوسُ أَمْوَالِكُمْ لَا تَظْلِمُونَ وَلَا تُظْلَمُونَ. If you repent, then you take the capital that is left. You will not be wronged, nor will you wrong others. Meaning that the capital that they've made in the past off of that activity is theirs to take, but they can't go forward for that. And that was about the disbelievers that were entering Islam and had interest-bearing loans that they had taken money from. So some scholars of tafsir have said if that's the case for the disbeliever who enters in Islam, then how much more so for the Muslim who then makes tawbah and repents from doing the same thing. The same rule would apply. So you could keep that gain that you've made over the years, right? But be careful about the things that you're going to invest in moving forward.
Okay.
A lot of stuff.
For the second one?
I said one question. That's it.
For the second one, I asking you about the margin.
I know, but I said one question.
Okay.
I said one question.
Let's close with dua, inshallah. Stay. Let's make dua.
سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك. O Allah, as you gathered us in this house of yours, gather us together in Jannah. O Allah, make our wealth, our health, and our families all based on halal and seeking your pleasure, and avoiding your anger, and becoming the best that we can in this life and the next. Sallallahu alaihi wasallam.